Hello everyone out there. Welcome back to Finbuzz Learning. As in our previous video, we have already covered equity shares and preference shares in detail. Therefore, in this video, we are going to discuss the difference between equity share and preference share. So let's begin. As you guys already know, equity shares signifies a company's ownership, while preference shares have priority access to the business's assets and income. The main distinction between equity share and preference share is also in regard to voting rights and ownership of the company's asset and dividends. While preference shareholders have preferential claim over the company's asset and revenues, equity shareholders have the opportunity to vote. Now, let's discuss the difference between equity shares and preference shares one by one. So the first difference between them is their meaning. So equity share signifies a company's ownership, while shareholders with a preference have a claim to the company's asset and income. The next difference is return. So, under equity shares, there is a capital appreciation, whereas under preference shares, there is a regular dividend income. Now, the next difference is dividend payout. So, after preference shareholders have received their dividends, then dividends are paid to equity shareholders, whereas the priority for dividend payments goes to preference shareholders. So the next difference is the rate of dividend. So under equity shares, the rate of dividend varies depending upon their earning, while the rate of dividend is fixed under the preference shares. Now, moving on to the next difference, which is bonus shares. Well, equity shareholders may obtain bonus shares in exchange for their current holdings. However, stockholders of preference shares or preference shareholders do not receive any bonus shares in relation to their holdings. Now, coming to the next difference, which is capital repayment. So, at the time of winding up of the company, the equity shareholders get paid in the last, while preference shareholders are paid before the equity shareholders because they have already given a priority over equity shares. The next difference is voting rights. Well, equity shareholders enjoy the facility of voting rights while preference shareholders do not carry voting rights. So the next difference is participation in management decisions. So as equity shareholders are having voting rights that enable them to participate in the decision of the management, whereas preference shareholders do not participate in the management decision because they do not have voting rights. The next difference is redemptions. So, equity shares cannot be redeemed, while preference shares can be redeemed after a fixed period of time. The next difference is convertibility. Well, equity shares cannot be converted, while preference shares can be converted into equity shares. Now, coming to the next difference, arrears in dividends. So, the equity shareholders are not entitled to dividend arrears for prior years, whereas if a dividend was not paid in the previous year, preference shareholders typically get both the current year's dividend as well as back dividends, with the exception of non-cumulative preference shares. Coming to the next difference, which is nominal value of shares. So, equity shares have shares with a low nominal value, but in general, preference shares have a high nominal value. Now, the next difference is an appeal to investors. So, for risk-taking investors, equity shares are attractive investments. But in case of preference shares are attractive investment for the cautious investors. The next difference is the risk involved. So in the case of equity shares, there is a high risk of return and repayment, while there is little risk involved regarding returns and repayment in the case of preference shares. Now moving on to the next difference, which is the market value of shares. The value of equity shares changes over time. In contrast, the value of preference shares remains constant. The next difference is capitalization. In case of equity shares, there is a high chance of overcapitalization. But as compared to equity shares, there is a relatively less chance of overcapitalization in case of preference shares. Now coming to the next difference, which is their types. So equity shares are categorized as ordinary stocks of a company, whereas there are several types of preference shares. For example, participatory, non-participatory, convertibility, non-convertibility, etc. So the next difference is financing term. Equity shares serve as a means of long-term financing, whereas preference shares serve as a means of mid-term and long-term financing both. The next difference is a mandate to issue. Companies must issue equity share capital, but all companies do not need to issue preference shares capital. Coming to the next difference, investment denomination. Equity shares have a lower denomination, whereas most preference shares come with a high denomination. Coming to the next difference, which is the types of investors. So equity shares are suitable for risk-taking investors, but preference shares are suitable for risk-averse investors. Now the last but not the least difference between both is the associated burden. Under equity shares, paying off equity dividend is not mandatory and depends entirely on the company's profit. In contrast to this, under preference shares, companies are obligated to pay dividend to their preferred shareholders. So here we have covered the difference between equity shares and preference shares. We will again back with another topic of finance which will help you to understand finance very easily. So stay connected with us for more videos. Thanks for watching and do not forget to like, subscribe and share the channel with your friends and relatives.